I think Amazon highlighted, the 175,000 jobs that it's created in the quarter. But, all of these companies are platforms. They create huge opportunities for small, medium-sized businesses to reach customers, for app developers, for software developers. And as platforms, they have great responsibility, but also great control. And that requires regulators to make sure that that's policed appropriately. Regulation and innovation go hand in hand. It's like a car and a safety belt. When they're matched together, it can build trust. And it requires investors as well to be, socially, environmentally conscious and engage with these companies to make sure that they act appropriately and use these platforms to really help small, medium-sized businesses and developers get to market. And I think we did really see evidence of that during this quarter.
Let's take a look at Apple, another blowout quarter for the smartphone maker. And interestingly, the iPhone was a key strength for them this quarter. What did you make of their results and their decision to go for this 4-for-1 stock split, clearly opening the door for more retail investors, it would seem?
Apple have done that throughout the history of the company. It continues to make the stock accessible to small retail investors. The strength in the iPhone is incredible. With the launch of the SE, and with the Apple trade-in program and financing, what Apple managed to do was to make iPhones more accessible. Apple still have less than 50% market share, and they really saw a lot of increased switching from Android onto the platform. And just building that user base at this scale is incredible. Even for the Apple Watch, 75% of the buyers of Apple Watch were new. So they're really building out that ecosystem, broadening the number of users that use Apple products.
Alison, I want to buy technology, but I don't necessarily want to pay a triple-digit PE for that technology. And when I look at Amazon at the moment, for understandable reasons, that's kind of what I'm being asked. Where can I go to find technology at better value?
Well, actually, for many of these large cap companies, for Apple, for Facebook, for Alphabet, when you consider the balance sheet strength that they have, these companies have over $200 billion in net cash. And the valuations on those three companies, in fact, when you compare it to a Procter & Gamble or a McDonald's or a Coca-Cola, these are effectively some of the consumer staples of today. And Amazon, I would just take issue with the triple-digit PE. I think, with Amazon, you have to be a long-term investor. And when we look out over the next 5 years and the growth potential that Amazon has, we think actually valuation is still very reasonable on a long-term basis.